Let's take a look at your market news now. Asian share markets fought to regain their footing this morning as investors clutched at hopes that China could contain the coronavirus, even as headlines spoke of more cases and mounting deaths. Helping the mood were surveys showing Chinese manufacturing activity came in much as expected in January, though this was likely before the virus took full hold. Japan's Nikkei bounced 1% but was again off 2.5% for the week. It now sits at 23,205 points. The Hang Seng was slightly down today, trading at 26,375 points. The Shanghai is still closed. Let's go to the United States now, where stocks rebounded late to close higher last night after the World Health Organization declared the coronavirus a global emergency, while earnings painted a mixed picture. Facebook shares slumped over 6% after the social media company warned of slowing growth as its business matured and it reported a surge in quarterly expenses. Defense sectors such as utilities and consumer staples, considered safer in times of economic uncertainty, advanced. The Dow Jones Industrial Average rose 0.4% to 28,859 points. The S&P 500 gained 0.3% to 3,283 points, and the Nasdaq Composite added 0.25% to 9,298 points. Let's take a look at the rest of the markets. Warwick Lucas from Galileo Capital joins me in studio. Thanks for your time this afternoon. Of course, we have to start with the coronavirus. What's the global market outlook in terms of that now, and specifically South Africa as well?
Well, I think what is probably most notable is how much we don't know, and perhaps the runner-up is how much we think we know, and in terms of markets. Now, I've seen one study where they've taken a previous 6 nasty bugs that did the rounds the last few years, added them all up and said, right, well, we're at the stage whenever the WHO declares it a global emergency, that tends to be the bottom. The trouble with that is that that's like a coin flip or perhaps a dice roll, and it's really a very dangerous game to play, and in particular in relation to this particular virus, because what's notable is that it seems to have a fairly fast rate of spread. So, for example, last Thursday night it had 830 confirmed cases, and last night we had 9,700. So it's got a fast rate of spread, and what's more scary is that being less lethal, it's the kind of bug where people who get it and aren't particularly affected continue to go about their normal lives, they continue to spread it, and that is really the big danger there, that there's actually much more likelihood of this one getting out of control than something like the SARS virus. So I guess the whole story is far from told at this stage.
Okay, let's look a little bit more closely at South Africa. The IMF says South Africa must reduce debt now. I mean, that's almost taken for granted, but how are we going to do that?
I suspect with great difficulty and a certain amount of tightening of belts. I mean, certainly government has to come in a lot more efficient and do a lot of cleaning of stables. So, for example, conflicted contracts and so on really do need to get cleaned out thoroughly. I mean, we saw Gordon announcing after his tenure at in Eskom that there were several thousand conflicted contracts there, and I mean that kind of thing is inevitably results in inflated prices, which means less taxpayer money going to real services for people.
Let's go a little bit further into our continent. MTN is set to raise 60 billion rand through sales of 14% of the Nigerian market. What's happening there?
Okay, so generally MTN has been busy slashing debt. If one looks at the EBITDA line, which is earnings before interest, tax and depreciation on MTN, they basically pay a full half away in depreciation of their assets, and then another quarter away in interest bill. So interest bill is a big factor in their lives. They've spent a lot on capital equipment, big borrowings with that, and paying it down would have some earnings benefits there.
There's quite a cynical view, and also there was an announcement made yesterday about this 1.6 billion that they're also putting in there, trying to offset the fine and trying to make that chaos that happened in Nigeria kind of go away and smooth things over.
Look, they operate in some very controversial geographies, and I think that's going to continue to be a factor that leans against the share price. I mean, for example, we saw on the 2nd of January a very quiet news period, the announcement, for example, about MTN Afghanistan being looked at along with a whole lot of other service providers by the US. So there's an endless list given the geographies, which are tough geographies that MTN operates in.
Tough conditions and tough times for Sasol, their trading statement. What's happening?
Okay, so that certainly was a mixed bag. And further down the accounting line items, that looked like quite a sharp reversal of earnings there. I mean, we're talking sort of 60 to 70% on the headline earnings. I think the good news there, though, seems to be that in terms of their debt management, they're in a good position. They certainly aren't anywhere near breaching debt covenants, and it's certainly well within guidance lines there. And I think that's the most important thing. They did, after all, borrow a lot of money to get Lake Charles going, and paying that down is a huge priority. And the one big factor in Sasol's favour, it is a very, very big cash generator. So I think they will see their way through this one.
Okay. Let's end off by taking a look back and taking a look at the global markets. Are they slipping?
I think they're certainly taking a bit of a breather after what was an incredibly strong December and January, and certainly the coronavirus has given some pause for thought. But quite frankly, if there hadn't been that, there might have been any other number of reasons. When prices have run hard, a period of consolidation does tend to be called for.
Warwick Lucas from Galileo Capital, thanks so much for your time on SABC News this afternoon.